Hello, 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 everybody. Happy Thursday morning already. How is everyone doing this fine Thursday morning, day before non-farm payrolls? Good morning, Mike and crew. Well, good morning, Amit. Good morning, Patrick. Grand rising to you, Christoph. Good morning, Martinez. Bulls are stupid. How's buying in this environment? Remember, things go is even in a short term, things are cyclical. And people have different viewpoints. A lot of people still think the lows are in. So they will trade that way. A lot of people think the bears are stupid. So the bears, why are people selling in this environment? You know the stock market only goes up. So that you know what? That's why there's trading back and forth. What our job is to find the potential trades, and if they trigger, then you execute them. Happy 3% Thursday. Is there a 3% Thursday? I don't know if we'll see a 3% day going into non-farm payrolls tomorrow. That would be very interesting. So let's take a look. We had initial jobless claims, slight miss. Continuous jobless claims, slight miss. Again, the stupidity. Now, you want to talk about stupidity? Literally, again, miss, and some of the people are banging the mantra. See, higher jobless claims, higher blah, blah, blah. Fed's going to cut or pause. All right. This is minor. That if you want to talk about stupidity, the people claiming that the Fed's going to make a decision off this number and a slight miss when it's volatile anyways is absolutely inane. That's talking about stupidity. By the way, it's not even listed all the fee. We have like 5 Fed speakies today. They're not all listed today, so we have multiples. I think there's 5. So pay attention to that. Market pretty just mixed today. Slight pullback still. We already have the potential topping pattern, not triggered yet, not even confirmed yet. We also have the pattern that we should see higher prices, at least in the S&P, based off our harmonic levels. So I'll go through all that in a second. Close to 70% still favoring the 75 basis point. Not seeing anything close to a pause, not even seeing it favoring the 50% basis point yet. Still negative gamma territory, so still potential volatility, although it could be a little more muted today because the big thing will be non-farm payrolls tomorrow in fear mode. In terms of earnings, we had Constellation Brands, which was a miss, trading slightly down this morning. Constellation was a beat, trading slightly down. McCormick looked like a miss. But nothing market moving there. I have yet to tear into their anything about the specific earnings after close Levi's. All right. Good day, Sterling. Good morning, Rich. Good morning, Sashi. Good morning, Josh. German government expects a recession in 2023. I do too. Good morning, Davey. Davey, what are you doing at the bottom of the list? Tardy slip for Davey. All right. Since right now, so far, we had a massive 2-day rally. What kind of correction is this? We tapped on the other side of the daily rotation zone. So far, this is a sideways correction. Daily cycles at the top. Now, daily cycles can even roll over with a sideways correction. Short term, I am still in pretty much neutral mode unless the double top triggers or another topping pattern triggers. Medium term, still in bullish mode. Why? Because we closed above the 62.5. Long term, still in bearish mode. All right, so depending on your time frames and what you're looking for, we can have people long, we can have people short. Neither of them are right or wrong. Still, watching, this would take me into short-term pullback mode. A close below the 62.5 of this run-up move would keep me in continued short-term bearish mode, and probably then we tip to medium term, and long term has stayed. So far, sideways correction. We start breaking below 37.66, 37.65 area. That's very short-term potential bearish to watch for a retest of the key 37.34 low, especially if market internals go negative. Other than that, the initial resistance is about 3,800 going into today. If market internals are positive, we get above 3,800. 38.18, then 38.27. And then would be up to the 38.45. So that's where we sit. Other than that, sideways. Remember, non-farm payroll tomorrow morning. So we could see a tighter market range. So that's why I am more short-term neutral unless there's some pivot intraday above or below key levels. But that's only going to be minorly bullish or minorly bearish. What substantially makes me more bearish is the trigger of the double. What makes me more bullish would be a break to above the overnight highs and yesterday's afternoon high. All right. Hey, Coco. Mike's teaching this ES 15-minute was interesting. Look at Head and Shoulders that turned into a double bottom, then like a cup and handle. And remember, follow. If you're trading on micro time frames, fine, but your stronger patterns are on the higher time frames, especially 4 hours and above. So I'd have to look at that, and I don't know if we have time to get down to the 15-minute time frame right now. So those are the key levels that I'm watching. The NASDAQ, no close yet above the 62.5, stalling out against the rotation zone. So I'm still watching that on a closing basis. You still have the potential, not confirmed or triggered yet, double top. So far, sideways correction. Cycles at the top. Short term, I am neutral unless we get the short-term breakout or breakdown play. The breakdown play is roughly for me about 11.5 with negative market internals. The breakout play, really, we have to get above about 11.660, 11.665. The minor target would be a retest of the highs. I'm just going to see. Oops, not that one. I want the other one. I want this one. I want to see where the next harmonic takes us with a cluster. Nah, there's nothing better there. So I will use 11.765 as a stop raise and then 11.794. The key level on a breakout would be above 11.828. But again, sorry, 11.52. But other than that, if it stays in this range, I am in more neutral mode. And it's, hey, you can always sit on the hands. Sit on the hands. We get the daily close above the 62.5. That reinforces the bullish mode. Again, where you can even see when you're trapped here. I actually love this pattern too, because we're trapped, and this is generally a consolidation pattern, trapping in the rotation zone. So I'm preparing for a breakout or breakdown play, which could happen tomorrow morning with non-farm payrolls should we not get any key move today. What I would advise, if we don't have strong market internals one way or the other, you don't get chopped up. Remember, every day isn't a trend day. Most days aren't a trend day, so watch for quick, sudden reversals and harvesting of key levels. The Dow, let me just take the short term, just so you know. And again, I'm not going to dwell on some of these other markets. We'll get to the spiders and the Qs in a second. Dow did close above the 62.5, so favors on the, once we get out of this range, still favors the continued price action to the upside. The Russell, no close above the 62.5. Yes, still potential double top. Other than that, Only way I can really get short-term bullish on the Russell is getting above 1785. The breakdown play is still in play with that potential double top 1734.80. DAX confirmed but not triggered double top yet. It is confirmed. So I will be watching that. And then you still have the gap play left behind. So that one completely valid. 12,358, 12,304, 12,248. And the full gap fill is down to 12,241. You get up in the vicinity of this 12,670 area, turns into a triple top. Notes. The only thing I'm keeping a very close eye on is this little mini potential double above 1222.5. 1229 and a half, 113.01, 113.04, holding at the 50% retracement level from this run up. We break down below that. You have the key support and the 62.5 at 111.27 would be a short-term breakdown play. A close, especially on a daily basis, below 111.27, then the target's back to 111, 111 and a half. All right. Dollar index. The only thing I'm keeping an eye on so far, we had reversal signals yesterday. I am keeping an eye on, and this has to be done off the conservative targets, but you break below 110.72 on a closing basis, at least want 4 hours, 110.29, 110.08 roughly, and those would be the first two major targets I'd be keying off of. That is potential, not confirmed. Still, I am still focused on the upside of with a break above 111.65. Does not have to happen today. 111.86 stop raise, 112.08 to 112.19. Next minor target area. Keeping an eye on this little mini double bottom. Doesn't have to do anything. We could stay in a range today. Also this, if we break below yesterday's lows around 28.50, we'll be targeting 28, and that would take me into choppy bullish mode. You break upwards. I know pre-market, somebody can put it in there now. This is 15-minute delayed because they don't offer it real time, but above 29.55, then would watch for this retest of the 30 area. But again, it does not have to trigger the double bottom. The double bottom still potential, not triggered or confirmed, would be above 30.11 for the confirmation. The trigger, I'd need at least a 4-hour close. Aggressive would be a 1-hour close. Crude's looking very toppy against this 50. Trailing stop is below yesterday's low from the bullish plays upwards. Other than that, we do break up above 88, 87 into a clear path move. That's where I start targeting the 92.50 and the deeper move into the weekly rotation zone. Other than that, not a lot of great setups on crude besides managing stops from any long trades before the OPEC meeting. Little key warning sign is if we do start dropping below, for the bullish case, below about 87.15. But you still have some pretty key support coming in at 86 level. Let's jump to the spiders, the Qs. I'll get back to comments in a second. Remember, spiders still favor, also like the S&P, a continued push after a pause or potentially corrective move. There is a double in play. Does not have to even come close to triggering today. First, with those little gap down, first intraday play with bullish internals is the gap fill in the spiders. Your key support is coming back down around 373. The trigger for the double, 370.94. Those targets, 367.42. I would not ignore the gap fill, which is 366.60. Again, this does not have to trigger today. I'm just listing this in case you can't tune in. 365.65, 363.89. The first play to the upside is that gap fill. Pretty key resistance still around 378. Do keep that in mind. The next major target on a break up is 381.26. Those are all your spider levels. The Qs support is around 278.35. Right now, going to have a minor gap down. The play to the upside is the gap play to 281.96. And there is major resistance at 282. Above 282 is a return to about 283.75 area. The breakdown play isn't below until you get below 275.39. The minor breakdown play would be below about 278.20. 278 to 278.20 would be the minor breakdown play. Keep in mind gap fill play before first target in that potential double, 273.57. Other targets for the double, 271.50 and 269.90 roughly, then 267.95. The same analysis I did on the S&P NASDAQ holds for the spiders and the Qs. Tesla, again, story stock based off of the whole Twitter thing right now is going to more so trade on anything breaking with that. Again, the lawsuit's still in place. Unless they can come to some terms and say, hey, we're formally requesting a withdrawal of the lawsuit. It is going forward. And that would probably pretty much be only on guaranteed funding, as I talked yesterday. So everything else, there's constant rumors coming out with everything. It's just a story stock. If we do break down below yesterday's lows, you do have some pretty decent still support coming in at 234.50 to 232. Break below that, that's where I start watching for downside acceleration to 225 to 222 to 220. Those are my next minor targets. Everything else from the bullish plays to watch for a rollover play, at least from this perspective. Major overhead resistance coming in around 255. Let's see. Chop, 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 says Sterling, and I'd be prepared for more. So that's why, again, it could be a perfectly fine sit on the hands days and avoid getting chopped up unless you start getting strong market internals, bearish or bullish. Yes, again, Rich, it doesn't have to be sideways, but I'm more prepared for choppy sideways. And that can be testing the support and resistance to try to suck people in, and then you get the reversal plays. Christoph, welcome. Hello. I find it interesting that the market didn't rally enough to negate the 4-hour double top on the ES. So that maintains in play until it's potentially negated. Don't get me started with the SPR, please. So some days there's just, if you're very short term, there's some days, hey, even to sit out. What's a good buy before opening today? What's a good buy before opening? I don't think there are a lot of good buys before the opening today. And that's not the point of this channel. The point of this channel is to learn analysis. What's a good buy? So far, we're in a very neutral mode. So everything is, as I said, is going to be keying off of short-term moves. And there aren't a lot of fantastic setups. It's now, from my perspective, managing any longs from the lows, managing with the stops, and not doing anything stupid before non-farm payrolls tomorrow. Remember, every day is not conducive to great trading. Could we start getting momentum? Yeah, but I need to see strong market internals one way or another and to break some key levels, which is why I listed it. No trade is a trade, by the way. It's keeping your powder dry for good setups. Welcome. Welcome, Mike. Elon destroys Dodge, Dogecoin, Bitcoin, Tesla. Yep. You longer term people know my thoughts. Let's see. Good morning. Good morning. Goodbye. See? I agree with Mike here. Goodbye. Go to the grocery store, buy some food. Manage your risk right now. Today's a day, don't do anything stupid. And sometimes, and the great thing, and here's what people have to learn. If we do start breaking, we still favor some upwards prices. Also remember, longer term, weeklies are still pinned at the bottom, even after a minor pullback. Unless we break those key levels and do the key closes, we could still see some upwards price action. That's why medium term, I'm still on the long side. Long term, I'm still on the short side. There are times, though, and that's one of the benefits about being a trader. Look, if you're a longer term or medium term trader, you manage your positions. If you're a short term trader, there's some days you just take off or watch the price action. If you get a good setup, you can do everything, but don't count on a good setup. People think they should trade every day. No, you should not trade every day. You should trade the high probabilities. Trade the high, and by probabilities, again, trade your expectancy moves. Again, they could be under 50% probability with a very good reward to risk ratio, which gives me a good potential trade. If there is not a good potential trade, there is nothing to do. And today might be one of those days that you don't want to do stupid. Warren, good morning. Still holding your reverse ETF. Goodbye. Start picking up distressed property. Again, it would have to be depending on your end. I think we're in some markets, it's still way too early to pick up distressed property unless you can get it at a super steep discount. I love to listen to a crazy classroom class on market internals. Maybe I touched on some of it with the tick the other day. I'm going to wrap this up soon. But this is where you got to learn to start reading stuff like market internals yesterday with that doubles. Remember the doubles and look at the market internals. I just wanted to point something out yesterday open. This, you see, remember that double that top that triggered? We went down, NASDAQ hit all three targets, S&P hit the first two and a little bit of the third before we got that short-term bottoming pattern. Look at your market internals going with the open yesterday. See how it was so negative and then it shifted end of day and we rallied? Well, it shifted midday. Learn to watch for that. That's your first key sign. Why do I watch the cumulative tick? Because that's the cumulative tick of the New York Stock Exchange, which gives a broad measure of buying or selling pressure in the stocks. So market internals, if you're going to look at one thing, it's the first thing. If I could only look at one thing besides the price action for a market internal, the immediate thing I'd flip to is the tick. You can also look at the cumulative tick on the NASDAQ too. Learn to read that first. And sometimes it can stay back, chopping back and forth, and then it's going to confirm the more neutral standpoint. So I went over my key breakdown, breakout levels. Just be careful that if we come back down here, test this 3766, dip below it, be prepared for potential snapback reversals unless the market internals confirm it. Yes, 4-hour currently has a divergence. Remember, we can get multiple divergences on a short-term snapback. That's why I'm more focused on there is a divergence. Higher high prices, lower high. With this kind of stronger move, I'd rather see a double or triple divergence unless we trigger the double top. The doubles are a stronger pattern than a divergence. And why, especially with the double top, I've tested this out with a double top. Either that's going to trigger, or we get another push up and that invalidates the double top, but then we have a double divergence, which means we could still get a reversal pattern. It's actually a higher level of a reversal pattern, meaning I could use a tighter breakdown level. All right. With that, I'm integrating a tick into my trading now. It's powerful and has kept me out of 2 fake outs, and that's why I slowly introduce things to people, because if I throw everything against the board, you know, people can get overwhelmed. But once you get down some patterns and price action, you incorporate more things into your analysis to help fine tune it. All right, market's open now. I can't stick around for the open. So I will talk to everybody after the close. Bye.